Recently, the World Economic Forum released a report calling blockchain technology a megatrend that will shape society in the next decade, predicting that blockchains could store as much as 10% of global GDP by 2027. Simply put, blockchain networks allow people to transparently exchange money and valuable information digitally without central administration. Today, we will explore further how this works, what challenges are still out there with the technology, and what's the current state of adoption. Our guest is a former investment analyst at CG Capital Markets. Currently, he manages a crypto investment hedge fund and is a founder of Master the Crypto, an educational hub for everything crypto and blockchain. Please welcome Aziz Zainuddin. Hello, Aziz. Thank you very much for being here and welcome to the Online Crypto Summit.
Hello, I'm glad to be here and share my knowledge, and hopefully I can explain more about cryptocurrencies and blockchain in further detail. Thank you for having me here.
So can you share first a bit about your background and how did you get involved into the crypto space?
All right, sure. So basically, I got involved like 3 years ago. I was actually doing my internship at a fund, right? Investment fund, so called CG Capital. So what I was tasked to do was to look at the crypto come blockchain industry and propose some business ideas, right, and analyze the entire space. So back then I didn't know anything about cryptocurrencies, so I started to delve into it, and once I delved into the crypto industry and looking at understanding the how it works and how revolutionary it seems to be, I was completely like hooked, right? So because I see it as a total disruptor into the traditional setting, and then I was hooked. Then I invested most of my capital in, and it paid off quite a lot because at that time Bitcoin was like $500. So then I started to because at that point of time it was very hard for me to find easy and simplified resources and content to understand cryptocurrencies because it was really complex, right? I'm sure many of us are aware of that. So what I tried to do after that was once I got a hang of how what cryptocurrencies are and how they work and how the markets work, I actually created my own website called masterthecrypto.com. So what we try to do is to simplify cryptocurrencies as much as possible to the newbie. So in Reddit, we have a term called ELI5, right? Explain to me like I'm 5. So basically that kind of guides and content to really simplify the complex world of crypto investing as well as the underlying mechanisms of blockchain technology. So that's what I've been doing.
Yeah. And it's a very much needed resource. Any kind of educational resource, it's very much needed right now to bring this awareness to people where the world is heading, because it's going there regardless of whether they get into it early or not.
Yes, exactly.
So you're based in Singapore, is that correct?
Yes, I am.
So it's a big scene for the crypto space. Would you talk a bit about that and what is the current state of the development and adoption there, and how people and government react to it?
In Singapore, yeah, excellent. Yeah, sure. I will start from the government level and corporate level and then the retail level. So at the government level, it's very positive. In fact, Singapore is one of the leading countries that are actually exploring blockchain in real time. We have a project called Ubin Project, which tries to explore how we can use that into our public infrastructure. And so far, the tests have revealed that it's a positive outcome. And the Monetary Authority of Singapore are even looking into how they can create like interbank transfers, perhaps using blockchain because of its obvious benefits, right? Transparency, immutability, and all that sort of stuff. So at the government level, it's very positive, right? At a corporate level, it's also looking very positive, given that many ICOs nowadays are looking to incorporate in Singapore. And you can see that many projects now they are either established in Singapore or incorporated in Singapore because the regulatory is a very conducive space to create like innovate in this kind of stuff in blockchain. So that is good.
The framework is clear.
Yeah, the framework is not clear at the moment as with any other countries, but it's looking to be positive right now, the regulatory landscape. So that is good for us, right? But at the retail level now, this is kind of an irony, right? Because government and corporate level is good, right? It's very positive outcome. But at the retail level, what I find extremely ironic is that it's quite hard for us to buy cryptocurrencies. And even if there are a few exchanges, of course, but the liquidity is just not there. So we have to pay premiums on that. And there has been a lot of cases where exchanges, their bank account were shut down, right? I don't think it was because of regulatory reasons, but perhaps because of the banks themselves not wanting to be part of the cutting off, like shunning the crypto establishment. So that's kind of a bummer for us Singaporeans at this point, but I'm sure that in the long run, it's going to improve for the better.
All right. So going back to the basics of crypto and blockchain, could you explain to our listeners and to the audience, what does it mean to put a block on the blockchain?
All right, sure.
And keep in mind people with no technical background, so let's speak to them. Sure.
I hope that I will do a good job in explaining what a block is. So let's bear in mind that most of what I'm saying is going to be in reference to Bitcoin, because it is, after all, the first decentralized cryptocurrency, and from blockchain technology comes from Bitcoin. So whatever I will reference from is from Bitcoin, right? So in this case, block in the blockchain technology is simply just a block is just just think of it like a block, a square box where thousands of transactions, usually 1,000 to 2,000 transactions are collected, right? So it includes your transaction of sending, say, 1 Bitcoin to your friend or to an exchange, right? So that is considered one transaction, and thousands of other transactions are put inside the box in this block, right? A square block. So what happens is that once your transactions is in a block, what miners do is that they will collect your transactions in a blocks, and what they try to do is to secure your transactions, right? So what miners try to do is they try to solve complex mathematical formulas to secure the entire block, right? Using advanced hardware, which can compute like trillions of numbers per second, because it is a race, right? Miners are racing each other to solve this problem, to find a magic number, right, to secure that block, right? And on average, it takes 10 minutes. On average, the network takes 10 minutes to find the magic number, right? So after 10 minutes, it's a race essentially. So all miners around the world, all Bitcoin miners around the world will rush and do a lot of complex computations using a lot of electricity to secure the block by finding the magic number, right? It makes sense, right? So at the end of the day, the winning miner within, say, at the 10-minute mark, right? After he has exhausted all his resources to find that number, and if he's the successful miner, what he gets at the end of the day is that he will get, in return for his resources, he will get Bitcoins in return for his work. So a block is essentially filled with all the transactions, usually 1,000 to 2,000 transactions on average in the Bitcoin blockchain. So that is what a block in the blockchain is.
Okay, so why do we need to have blocks in the blockchain rather than just a streamline of transactions?
Okay, that's a good question. So basically, the Bitcoin blockchain was created from a single block, right? They call it the Genesis block, right? Satoshi Nakamoto, the creator of Bitcoin, created this entire system through blocks. And why is it blockchain? It's very interesting because the nature of how blockchain works is that, imagine a chain of blocks. That's why it's called blockchain, right? Imagine a chain of blocks, right? Each blocks are interlinked with one another. So, for example, this is the current block, right? So after the miner wins it, then the new race comes after the 10-minute marks. Another 10 minutes, there's going to be a global competition, and a miner is going to start mining a new block, right? Before he starts mining the new block, he has to take the hash. Hash means a fingerprint of the previous block and paste it to the new block, right? So the digital fingerprint of the old block is going to be used for the creation of the new block, and all the new transactions are going to be filled inside the box, and the next round of mining begins, right? So blocks enable this system to work in a sense that each block is correlated or interconnected with one another. And this is an extremely important point because this ensures that the entire blockchain is secure. Because for any hacker to hack, right, any transaction or the block itself, not only must they hack that block, but they have to hack the previous block and the previous block all the way till the first block within a span of 10 minutes. That's why it's extremely secure, and that's why blocks are needed to ensure the integrity of the system.
And also, does this arrangement of blocks, every block collecting this hash number, the specific code from the previous one, does that guarantee also the order of transactions, or how do you determine that which transaction came first or which came afterwards?
Okay, excellent. Because that is a very interesting question, which is I'm gonna explain further. So basically, for example, if you send a transaction, right, and your transaction is going to be propagated to the whole Bitcoin network, right? And miners are going to start picking your transaction. But remember, every 10 minutes, 1,000 to 2,000 transactions are going to be filled inside the box. Imagine if at this point, there's 10,000 transactions. So whose transactions get filled first, right? So I think that's that's a main question. So there is so basically, I'm sure you are aware of the fees that you pay, right? You can choose which fees how much fees that you're gonna pay for your transactions. If you set it at the default rate, then it's gonna be a normal time. But if you increase the amount of fees that you're willing to pay, you are put in front of the queue, right? And miners usually love this kind of transactions because they get more money, right? Not only will they be getting the block reward if they successfully mine, but they're also gonna get the transaction fees that people like us pay to jump ahead of the queue to get our transactions prioritized, right? So that is how
we are bidding for the transaction.
Yeah, you're actually bidding for a place to get your transaction confirmed faster within 10 minutes, right? If it's normal, or if you don't want to pay any fees, I mean, that's fine, but you're going to wait a longer time, right? And there's an algorithm which states, mentions that the longer your transaction is in the network, the higher priority it gets. So for example, if you don't want to pay any fees or very low fees, then it's going to take longer, but it's gonna, the longer it gets, the higher priority your transaction goes, right? So
also just offset a little
yes,
bidding. So you don't have to
it
wait
offsets. Exactly. Because if everyone keeps paying and you don't pay, I mean, you will just get stuck at the bottom, right? So that's why it's very, very naturally interesting to see this kind of systems, this kind of advantages.
Beautiful. So now this leads me to the next. Actually, you already answered my next question: why there is a need for a transaction fees when miners already get rewarded with they create bitcoins for mining, and this is something what is called proof of work, and this is the consensus mechanism. Okay, so can you explain what's the difference then between the proof of work and proof of stake, which is an alternative? And I know that Ethereum they want to move to that, and I'm curious why would they prefer this method? Why is it better, and how does it work?
All right. Great. Before that, I would like to answer one point about the fees as well. It's important to note that not only do we have the capability to choose if you want to get ahead of the line, but the fees mechanism in Bitcoin is extremely important to prevent spams, right? Imagine if there's no fees. Anyone can send thousands of spam transactions, and miners will be doing redundant work, verifying that spam, right? So they created this structure so that whenever you want to use the Bitcoin, or as in transact with Bitcoin, you have to pay a certain fee so that it stops you from spamming the network, right? And that's a good way. And also another thing is that, sorry if I may add on, we all know that Bitcoin, there's going to be a limited supply. 21 million is ever going to be existing, right? And now the halving process is getting smaller and smaller. And once there will be 21 million Bitcoin ever created, then how will the miners earn money, right? How will miners be incentivized to secure the network? Right? So that's why there is the structure of fees there also.
But then
Right?
the fees will increase once the supply is over.
Yes.
So will that model be feasible then, or is there a possibility that the transactions will become too expensive? I mean, too expensive compared to what we currently have with, let's say, Visa or MasterCard.
Yeah, definitely. I mean, that's why there's when we talk about cryptos or blockchain, there's always that major problem of scalability, right? And the thing is that it's kind of a natural, it's an innate characteristics, right? When for example Bitcoin gets too popular, right, prices of transactions fees will increase, right, at one point, right? So that's why they are trying their best to create, as in developers are trying to find which solutions to solve this issue so that fees are always affordable. And I think we'll touch on several ways that they're gonna solve that problem, and they're already working on it right now.
Mm-hmm. Yeah, because a recent example I heard of it on the Ethereum network when a very popular CryptoKitties happened, and a lot of people started collecting it and buying it, and then the transactions went to way high up for other people to keep up. So is this something that could be resolved in the future and prevent people to wait forever?
Yeah, sure, definitely. And that's the problem with a decentralized currency or system, right? The fact that, for example, Bitcoin, right, since 2010, there's a limit on the block size, right? Remember we talked about blocks, there's a limit, 1 MB, 1 megabyte, right? So there's only certain amount of transactions that you can fit into that within 10 minutes, right? Imagine if Bitcoin gets so popular, or Ethereum gets so popular that, you know, people will be paying much more overbidding just to get a hit, right? And that's the cause of this scalability issue. So to answer your question, there will definitely be ways and solutions that developers come up with, right? But there's always going to be a trade-off. This is very important to understand. There will always be a trade-off in a decentralized system, usually within three main attributes, right? Firstly, decentralization. Secondly, security. And thirdly, scalability. Usually, you have to choose two and give up one, right? Because you cannot, as in that cryptocurrency cannot be purely decentralized, right? And usually a purely decentralized system, it cannot scale well. Just like Bitcoin, it can only generate like X amount of transactions per second, right? So, but MasterCard can generate 45,000 transactions per second. Ethereum can do 7 to 15 per second, right? You can see the vast differences. Decentralized networks have that limitations, right? And in order to increase scalability, you would perhaps give up, say, security as well as decentralization, because a centralized system will be extremely fast, like MasterCard. So there's always going to be a trade-off. And the community and the developers, at the end of the day, they have to figure out which trade-off is good, is suitable, right? Is it a high, quite a okay level of decentralization and high scalability and high security, or the other way, right? So it's always a choice to make.
Yeah, and I see many hybrid models that where the systems are decentralized, but they have some centralized elements on it to process the transactions faster. So maybe we will see more of that coming as well.
Yes, definitely. Then there already is, for example, the Ripple network. What they're trying to do is cross-border transfers. Even for example, there's even new as in new technologies being developed. For example, IOTA and Lisk, for example. What they're trying to do is that instead of a normal blockchain that I've explained to you about, that we traditionally know, they are using another form of technology called DAGs, right? Direct acyclic graphs, directed acyclic graph, I think. So it's also known as Tangle, right? So it's an entirely different system, right? Instead of okay, what they try to do is IOTA in Tangle is that it is going to be, there's not going to be any minus, there's not going to be any fees, right? And they can generate like thousands of transactions per second, right? So it's not a traditional blockchain, but it's sort of like a new kind of play within this as in evolution of blockchain technologies.
Is it still decentralized?
Okay, that is, yes, that's what they pride on, as in that's what they say they are decentralized, because how DAGs or work is that it's usually, for example, for any node, right? Any one of us can be nodes, right? For any one of us that wants to verify, as in we have a transaction that we want to send out. For example, we want to send one X coin to another party, right? Before we can even do that, we have to verify two prior transactions, right? So this creates a system where there are no mining centralization, right? So in Bitcoin is especially popular because many corporations have built mining facilities and hash powers, and it's very centralized. But in DAGs, it's very decentralized in the sense that each one of us participate in the system, and we ensure the scalability of the network by participating. So whenever we want to send a transaction, we have to verify two more, right? So it's like an innate system where it makes sense, but at the same time, we must be aware that it's a very new, it's not 100% proven, just as in it doesn't have a longer track record than Bitcoin. So there's still a lot of limitations to look at.
Yes, we have to see. Okay, so going back to the proof of work and proof of stake, can you share
Yeah, sure.
your knowledge on that? Yeah.
So proof of work, as we know, uses extreme amount of electricity, right? And that is bad for the environment. We all know that. But proof of stake, in which Ethereum is going through that phase, right? Okay, Ethereum has 4 stages, right, of development. And now we are going to our 3rd stage, right? And the 4th stage of Ethereum development completely moves Ethereum from the proof of work, which is the same as Bitcoin's consensus mechanism, into proof of stake. So what this essentially...
Can you talk a bit about the Ethereum stages of development? Just fill the audience in on that.
All right, sure. So POS is essentially a different kind of, they want to achieve the same goal but through different means, right? So instead of miners, they use a lot of electricity and use complex equipment, hardware equipment, to verify transactions. What they do is that for anyone who wants to mine, right? So you have to make sure that you have a certain number of Ethereum. So they call it staking, right? So what it means is that if you want to be a miner, you stake, for example, you must have 50 Ethereum, right? And that 50 Ethereum is going to be locked up in a smart contract, right? So it's going to be a random kind of thing where, if you are chosen, you must give the X amount of Ether into the smart contracts and you do the mining. And one thing cool is that it aligns you, it means that you have skin in the game. So if you try to do anything destructive or anything funky, right, the network realizes that and you will lose your Ethereum, right? So that's a different method, and it's it requires a lesser amount of energy consumption. That's why POS is more environmentally friendly, and they say that it's more decentralized, because in Bitcoin's proof of work, a lot of mining centralized factories come up in China, right? They have a lot of hash power, and it is vulnerable to an attack from them. But in a POS system, usually it's usually centered towards like small timers like us, or less. There's high barriers of entry for centralized miners to come in the game.
So what other consensus mechanisms are out there that are interesting to look at?
There's one as in which looks interesting is delegated proof of stake, which is another twist on POS, right? It was created for BitShares, and now there's a lot of other coins that use it, like Steam, created by Dan Larimer. So decentralized proof of stake essentially means that, imagine it's a country. Imagine a country. Each one of us has the right to vote, right? So if we hold that country's currency or that cryptocurrency, we all are entitled to vote. Who do we vote for? In a DPoS system, we vote for who we call delegates. So what delegates do is that they are the one that mines the block, they secure the block, verifies transactions. So we vote them into office, right? So we vote for them. And if they do anything bad, we can vote for them to be kicked, right? And these delegates are paid, right, to maintain and secure the entire system. So that implies, in DPoS system, implies a degree of trust to the delegates, right? Because you are trusting them to make sure that they verify transactions well, right? Or else they get booted out.
So that's you're trusting them, but you're also monitoring them in a way, and you can
yes, exactly
withdraw your trust.
Exactly, and the good thing about DPoS is that you are relying on a small pool of trusted and verified delegates, right? And in a decentralized network, the lesser amount of miners means that the more transactions that can be processed. So it increases scalability in like a logical sense, right? More transactions can be approved by one person rather than 1,000%. Now, in a sense, because in a completely, for example, in a POW, proof of work Bitcoin system where there's a lot of miners and there has to be a general consensus throughout the tens of thousands of miners. But for a DPoS system, the consensus is only within a small group of people. So it makes it much more efficient.
Okay, cool. So how about storing data on the blockchain? I keep hearing from here and there that it's very expensive. What are your thoughts on that? Why is it expensive, and what is a possible solution?
Okay, that's a very interesting question. So if we talk about the traditional cryptocurrencies blockchain like Bitcoin and Ethereum, we don't usually store data, right? For example, any kind of data that we want to store, usually when we want to store data, we store it in a storage, like a cloud storage at the moment, right? But not on the blockchain, because usually a blockchain just what you call it, captures the data of the particular transactions or transfer value. But if you want to talk about storing data that you want to have, be it your user data or your corporate data or anything like that, then there are a few developments or innovations in the blockchain space focused towards decentralized cloud storage, like Storage or SIA, SIA, Filecoin, right? So these are those projects that try to solve that problem. But if, let's say, you can also theoretically store data in the Ethereum and Bitcoin blockchain, but it's extremely expensive. I heard, I saw some calculation which states that at current prices, it costs $76,000 to store 1 GB of data in the Ethereum blockchain. That kind of thing is not feasible in the real world, because that as in you use Google Cloud, you have to pay cents on that GB, right? So instead of 76,000. So it's not really feasible to store it on the traditional Bitcoin and Ethereum blockchain. But if you want to talk about decentralized cloud storage, like those who I have mentioned, then yeah, because they are trying to solve that problem. And also, if what they said is that decentralized cloud storage is going to be much cheaper relative to centralized storage solutions like Dropbox, So I think that is very, very interesting. But given the fact that centralized storage solutions are at risk of a single vector attack, and it's not transparent, decentralized cloud storage systems are actually a good alternative, an excellent alternative to the centralized structure. And if they are more cheaper, then definitely, it makes sense to go with the decentralized storage solutions providers.
Yeah, because a use case for that, for example, would be processing transactions and storing data on a supply chain. Let's say if you want to track a supply chain and make sure that you know where your food is coming from and how it's been grown and all that. So where would that information be saved? It should be saved off-chain, and then what kind of input will go through the blockchain? I get a bit confused on that. How does blockchain work in that use case, but without actually storing the data?
Okay, it's interesting that you mentioned, like, for example, in the supply chain. I agree that it's a great use case, but for any project, we have to question the use of a blockchain. Are they really needed, right? So, for example, if a company wants to create a blockchain, a supply logistic block, and they store their data on the blockchain, we have to ask the questions: do they really need the blockchain? Can they solve this problem using a centralized database, right? So yes, it's a blockchain is decentralized, it's transparent, you can see the actual data, but on the back end, how will it work, right? So how how do we make sure that people are interested enough to create nodes in the system to support the system or the logistic or the supply system to ensure that there are enough miners to make it decentralized, right? Because at the end of the day, if the company only, as in if the company is the only one in charge of the few nodes which verifies transaction on their blockchain. So it is ultimately a decentralized, a centralized kind of database, because if they are the one that controls the entire system, then it's sort of centralized, right? And frankly, why would they want to spend a lot of money doing that way when it's much more efficient and cost effective if they use a central database to do that, right? So there's a lot of things that needs to be considered when questioning whether there's a real use case for a blockchain for that, say, company or that project, right?
Yeah, can you elaborate a little bit more on that and share some of those considerations?
All right. So, for example, if you want to talk about same example, the supply chain, right? I think what is needed is, for example, a tracking device or tracking what mechanism to ensure that the end customer or even the corporation or even the stakeholders are aware of the points of all the data at each point of the supply chain, right? So a tracking device would suffice, right? But if you want to talk about how you want to use blockchain to enhance your business processes, for example, then perhaps the evolution of blockchain, i.e. smart contracts, which is a major great use case, it can also streamline your business processes, for example. So if that supply chain uses smart contracts, ensuring that the tracking mechanism is the data will be sent into the smart contracts and will be stored in the blockchain. So it allows for greater, what you call that, efficiency, streamlining the process, because you don't have to do any manual. You cut down in the manual processes, right? So using smart contracts in the supply chain would really bring a lot of benefits. And from there you can see that, okay, I mean, that kind of information or data stored on the blockchain to allow all stakeholders to view the data in real time, then it makes sense. For example, using smart contracts and oracles, right, to ensure that the data is verified before it's sent to the smart contracts. So that kind of streamlining business processes would work well with the supply chain industry. And there are a few projects already working on that right now.
Oh, great. Can you share what?
Okay, I particularly was interested in Modem, MODUM, short form MOD. And what I did a review on them because I was really impressed by what they do and the list of partners that they have and are about to reveal, right? So, and I think that's a huge need which can disrupt the space. And the great thing about Modem is that they are now focusing only towards one niche, which is the pharmaceutical supply chain. But that is a use case, right? So if that works, I mean, the opportunity for any other use cases is great.
Great. Well, as we are coming to a close, would you like to share your thoughts on the current state of blockchain adoption globally, and what are we about to see till the end of the year and maybe next year?
Oh yeah, good questions. Sadly, at the start of this quarter, as in the year, up till now, we've seen a terrible bear market. Prices are tanking so hard, right? But does that equate to a lower adoption, right? So I'd like to separate those two things, right? Prices in the cryptocurrency market and adoption of the technology. So let's focus on the adoption of technology, because prices of the market are bound to speculations and a lot of other factors which may not be relevant to the adoption of the blockchain itself, right? Of all the amazing innovations. So if we want to talk about the adoption in the crypto space, right? So let me start with the role of the government. And I think that governments nowadays at this current state, especially looking towards how they can implement blockchain technologies in this. In fact, a few days ago, South Korea, they want a state in South Korea, Seoul, they wanted to create a new coin for them, right, for public payment system called S-Coin. So, this kind of interesting developments by the governments itself creates a very, very strong precedent for the way forward for blockchain adoption and acceptance, most importantly. Yes, I know the creation of cryptocurrencies was in a way designed or created because they want to get away from the traditional government centralized system, right? But the fact is that in a pragmatic sense, the government, as in via the government is right through regulations and legislations is how cryptocurrencies get sort of legitimized, right? And then businesses have a free mind to adopt blockchain technologies and perhaps delve into cryptocurrency, issuing their own cryptocurrencies. So the government at the legislative stage, there must be a green light, right, before it gets a huge traction, right? So secondly, the second layer, which I think we can see that a lot of developments are going on, is major corporations are picking up and exploring as well as integrating it with their current processes, right? So for example, Cisco, right? They just filed for patents for the blockchain technology, and they're hoping to launch their own innovative way of systems merchant payments. UPS is looking, TDS Bank, and IBM, Microsoft, right? And even Walmart, they're already looking and how they can streamline their processes using blockchain technology. So all these big names adopting blockchain is also going to help increase the awareness as well as the traction of adoption of cryptocurrencies. And that's a general trend that we are seeing, because no one can doubt the benefits and advantages that blockchain brings to the table, right? It's just that how can we make it, how can we bring it to the point where there's so much awareness and adoption from the retail perspective to sort of substantiate that growth, right? So I think going along the way, I'm very positive of the outlook of the growth of cryptocurrency, fueled by acceptance of governments and major corporations in the next few months, or in the next quarter.
Great. Well, Aziz, thank you very much for this insightful conversation. I'm sure our audience took a lot out of it. And if they have any questions for you, I will leave some links on the webpage. They can visit your website and follow you, learn more, and educate themselves.
All right. Thank you for that.